good performance coming in from the hospital company. They recorded healthy growth across all verticals. The revenue surged about 18% year on year, while occupancies have also risen to 54%, as has the average revenue per occupied bed by about 8%. Shanay Shah, who's the president of the company, now joins us. Shanay, good numbers coming in, 18% revenue growth, and like we pointed out, increase in occupancy and the average revenue per occupied bed as well. So if you could give us a sense of, how your hospitals plus specialties business performed this quarter, what was the product mix like, and guide for how the occupancy and average revenue per occupied bed would look like going forward.
So, good morning, Mangalam. Thank you for having me. In fact, yes, it has been a good quarter on the consolidated front. The top line at the hospital business has grown 22%. The EBITDA growth because of operating leverage has grown more than 31%. And, the PBT has grown in excess of 40%. So overall, we are quite happy with this growth. In terms of overall performance, the occupancy has grown higher double digit at about 15%. The average revenue per occupied bed has grown 8%, so I think, and that is also because of the specialty mix. The surgery levels for the orthopedic business has grown 18%. So overall, it has been a good quarter for us. And we believe that, with the existing capacity that we have, there is potential to grow at this level for the next 3 to 4 years. We do have a capacity of 2,000 beds. And, with the kind of existing occupancy levels at absolute level, we will be growing at this level for the next 3 to 4 years.
Okay. Shanay, hi. Welcome to the show. This is Ekta. Just wanted to touch base upon the margin picture because that really surprised. 22%, it's a multi-quarter high for margins or maybe even the highest level that you've reported. Can you tell us whether this is now going to be a base margin that we can work with going forward?
Ekta. So I think, the hospitals business has, on a standalone level, we have been at a 25.8, so nearly 26% at the EBITDA level. It is one of the highest that we have reported in the recent quarters. Having said that, there is a room to kind of further go higher on this. And it is also because some of these hospitals, so of course the range is between 12% to 40% for our hospitals, the multi-speciality hospitals. So a lot of these hospitals which are between the 12 to 25% level have that, spare capacity where, if we are able to kind of expand and, grow that occupancy levels, operating leverage will come into play and, you will see higher occupancy, higher EBITDA margins. And I also say this because, all the other greenfield projects that are in the pipeline, they are going to take some time to come in to play. So, there's nothing that is going to drag this EBITDA percentage, over the next few quarters.
Okay, by the way, just stay on for a second, Shanay. I just wanted to pull up the chart of KPIT Technologies. That stock is now up almost 5%. Because the company has raised both its FY24 revenue as well as margin guidance. So that's the reason why you're seeing that sudden spike up in the stock. The constant currency revenue growth outlook has been increased to 37% from 27% to 30% earlier. So earlier they had a 27 to 30% band. Now they've increased it to 37%. And even the margin guidance has been increased to 20% plus from the 19 to 20% earlier. So that's definitely the stock of the moment. Keep an eye out on that. But Shanay, coming back to your business, the business of Shalby, I wanted to understand the implants business in this quarter. What was the performance been? When do you hope to achieve that $100 million target for the business? Will it be by the end of FY24?
Yeah, the performance for the implant business has been muted, and that is also because, we are facing some supply chain issues in terms of some of the products that were expected to launch. So we rely a lot on external vendors. And, one of the products, so we already launched one of the products, which is called the Tux. And, we are trying to complete the existing range of products. So there are two new products in the pipeline. One is, of course, the CKS 3.0, which is, an upgrade from, the previous version. And the other new product that is going to launch is the Ambition. So we expect that the CKS will launch in this second half of this year, and the ambition will launch in the last quarter or the first quarter of next year, the last quarter of this year or the first quarter of next year. So it has been kind of delayed by 6 to 9 months. So you are seeing the numbers to be flat. Having said that, we are kind of very confident of achieving this $100 million timeline, in terms of top line. We believe that it will kind of happen in the next 5 to 6 years. The immediate target is to get to that, $20 million mark, which we believe we should be able to get in FY25.
Okay, all right, Shanay. We're going to leave it on that note. Pleasure speaking with you. Thanks very much for joining in and speaking to us. So that is Shalby. The revenue growth is 18% this quarter and margins of around 22%. They do have 9 multi-speciality hospitals across West as well as Central India, and they are focused very keenly in terms of the implant space. That is KPIT Tech. Strong guidance coming in. So this